As Chinese stockpiling of industrial metals slows, demand from the developed nations of Europe and the U.S. have become the focus for metals such as nickel. Here's Michael Whitney with the story.
Hi there, Lori. Yeah, nickel is getting a little bit toppy, according to most analysts and traders I speak to. Take a look at the chart here. We can see what's been going on here. It's really been a story of Chinese demand, like lots of the base metals. You can see these huge peaks here at the very end of this chart. That's $20,000 per metric ton, and it looks like it's running out of a little bit of steam. What drove the upside? Well, it was Chinese buying, but right now they're looking a little bit on the supply side. There are some issues with a couple of the big nickel mines in Canada, Voisey Bay and Sudbury. That's about 23% of all the output of nickel in the world. Those have been down. That led to this fire to the bull side here. But right now, people are starting to look at the demand side, and they think that it may not necessarily be coming from China anymore. And they're starting to look at issues like consumer and retail sales in the U.S., and they're getting a little bit concerned right now.
So how does retail spending impact nickel prices?
Well, Lori, that's a really good question. It's really an issue of what is used to make, what nickel is used to make. And the bottom line is it's in your kitchen, Lori. It's stainless steel. So stainless steel demand accounts for 61% of all nickel demand, and the rest is made up of various alloys for industrial uses. That's why it's important here. Retail sales means U.S. consumers buying more appliances, buying more stainless steel toasters and refrigerators, etc. And that's why it's important. And right now, there's a concern that the U.S. retail buyers may not be here to rescue this market and keep it going higher.
So nickel prices then in a bit of jeopardy?
Well, certainly there are. There's two camps here, obviously. This is what makes a market. There's the bear camp and there's the bull camp. The bear camp is really led by the Morgan Stanley analysts. They think that this is the end of the road of Chinese restocking. They point to record London metal inventories. They look at the U.S. retail sales numbers, as I spoke about earlier, and then they look at the Chinese imports stalling. On the bull camp is really Barclays. I spoke to Nick Snowden yesterday about this. He thinks that the stainless steel inventories are at record lows. They need to replenish these stocks. They think the emergence of the Chinese middle class will continue this demand unabated going into the future, and they see that there just aren't that many more mines that they can go and find more nickel, Lori.
All right, many thanks for that.